What is going on, investors? Back again. Time to take a look at Nvidia Corporation, ticker symbol NVDA. They just reported earnings after the bell. We'll jump into those. We'll take a look what happened in the quarter, revenue-wise, profit-wise. We'll jump into the stock chart, take a look at what's going on there. So this is a $300 billion market cap. We see after hours, it's selling off just slightly. They're about to begin their conference call. We'll see if there's any news on that. Sometimes that moves the stock maybe up or down just a little bit. We see during regular trade, it traded off just a little bit as the general market kind of sold off today. The P ratio on this is pretty hefty at 90. The dividend is pretty small, but they do have a dividend, so that's kind of interesting. And when we jump into these earnings, we'll actually see that they have tons of room to increase this if they want to. So it'll be interesting to see over the years, if you're a long-term holder of Nvidia, if this dividend becomes a little bit more of the reason why you might hold the stock. Obviously, we've had a monster run, like a lot of stocks, but especially kind of in the chip space, technology space. You've had a monster run in these stocks over the last 2 years, and maybe you can call this a flex or whatever. It's only 3 shares, but I am long, full disclosure, I am long Nvidia shares. Again, I bought 3 shares back in November of 2018. If you look at this chart, it's right in this time frame when this stock, I remember they reported earnings or they did something and the stock tanked, and I bought shares, and you can see I paid $161 per share. I am up 196% in just under 2 years time frame. So people ask me all the time, why don't I invest in Plug Power? Why don't I invest in space? Why don't I invest in Neo stock? Why don't I invest in some of these risky stocks? Well, guys, you can pick up blue chip stocks like Nvidia when they dip and then have nearly 100% year over year returns on a stock like this. Why do I need to take my risk with some of these more speculative names? Can you do well with Plug Power? Can you do well with Neo? Can you do well with Nikola? Sure, if you buy it right. I'm not saying you can't make money there, but my style is more buying these for sure blue chip names that do pay a dividend as well. Pick them up when they fall out of favor for whatever reason. You have to be very patient. You have to time it correctly. But if you're able to do that, take a look at the gains that are possible. I turned $161 in per share. That was only $485. That is now worth over $1,400 at today's market price. So, and you can see some of the other gains I've had on these other stocks. Again, I focus on buying blue chip stocks because they tend to go up almost as quickly as the riskier ones, and you're risking far less of your capital. So let's jump into Nvidia. So that was lesson number 1. Lesson number 2, let's jump into Nvidia and take a look what's going on here. We got 3 months ended here, July over July here, and then we've got 6 months ended here, July over July here. And so, man, explosive growth quarter over quarter here. We went from 2.6 billion all the way up to close to 3.9. The cost of revenue is relative, this is a pretty high margin business. I would say this is, close to 50% margins. It's actually a little bit higher than that. So you've got nice high margins at Nvidia, and those hold true even for the 6-month period as well. Look at the 6-month growth. We went from 2.9 up to 4.3. So this is a company that is firing on all cylinders right now. And so operating expenses, we see R&D just ticked up a little bit. We've got selling, general, administrative. That actually ticked up a lot. For the 6-month ended, not quite as much, but we are seeing a slight acceleration in the expenses. But this is a company that can afford it, because you see here, we paid 1.6 to net out 2.2. And so our income from operations is $651 million for the quarter. That fares fairly favorably to the previous period where we made 571. For the 6-month ended, all looks to be looking good because we made 929 in the previous period. And then this period we're at 1.6 billion halfway through the year. So that's a solid. So if you want to annualize this out, we've got about $3 billion worth of, I guess you can call it almost net income. We come down here to net income down here. We got 1.5 billion, or net income's really here, 1.5 billion. If you want to annualize that out, you're at 3 billion. And so you've got a $300 billion market cap. You see, and you're paying, again, close to 100 times earnings for a company like this, but they are growing very rapidly on the top line. And they're also growing, their gross profit is pretty high as well. And so you see here from an earnings per share basis, we had 99 cents earnings in the quarter, and we had 247 for the 6 months. The only reason why I want to bring that up is because of the dividend. Notice we only pay 64 cents per share for the entire year. And so this is a company that has tons and tons of room if they want to attract investors into their shares by increasing the dividend. Gosh, they could quadruple, they could quintuple this dividend and have plenty of money left over to operate the business. So that is a good sign. We see shares are increasing slightly, but this is relatively minimal dilution in my opinion, kind of quarter over quarter. Let's jump down to the balance sheet. Let's see how well capitalized they are. Now, so we see cash and cash equivalents. At first glance, you go, oh man, this is back in January and this is the current month. So we're about 6 months later. So we had call it 11 billion. And then boom, what happened? We're down to 3.2. Well, take a look. Marketable securities. This is cash as well. This is basically like treasuries, bonds, things like that. Just really safe notes or whatever. Well, it looked like all they did was move some money into there. So it looks like they're just parking some cash for a short period of time. Maybe they deploy that in another way, because when you add this up, you're at about $10.9 billion, which is almost exactly where we were back in January. Everything else looks pretty darn good. Our inventory is ticked up a little bit, so that's kind of interesting. Maybe they're well positioned for the holiday quarter, or maybe some refresh cycle, whatever it is, with their clients. Maybe there's some new computers, some new gaming things that are coming out. They're definitely big in gaming, and that's probably their number one revenue driver at the moment. So inventories have ticked up, so that could be a positive sign. It could be a negative as well, but I'll take it at first glance as a positive that they're going to be able to deliver the chips and the products to their clients, to their customers, to drive more revenue growth in the next quarter. We see assets actually ticked up nicely over the last year or so. Some of it is, or most of it, I would say, is probably tied up into this goodwill. They acquired, I think it's Mellanox, and this is the first, they actually closed that deal, I think, in the quarter, and so that's where some of this goodwill comes from, and so you can discount this maybe a little bit. All things being considered, it's pretty even on the asset side. Now, long-term liability side, we do have some long-term debt here, and that actually ticked up quite a bit. So it's interesting. I think what they did is, because our cash didn't tick up, but our debt went from, you see here, 2 billion up to 6.9 billion. My guess is they financed their acquisition in the quarter through a debt raise, which is probably not a bad thing, because the interest rate that they borrow at is probably low single digits, and the growth rate of the company that they acquired is probably in the mid-teens. And so it's a good trade-off. They're going to borrow a little bit of money at a low interest rate and acquire a company that's growing at like a mid-teens kind of valuation type thing. And so I think it's a good trade-off. And also, you see they have $10 billion in cash, and they're not really doing a lot with it, because we can see over the last 6 months, they barely touched their cash. And so they have plenty of coverage here on this long-term debt. Everything else, I mean, look at this. We've only got $11 billion in liabilities, total liabilities, $11 billion, and that's about what we have in cash, let alone all the other assets that they have. This is a company, from a balance sheet perspective, is as crystal clean as you will find. It's another reason why the stock has been kind of on a monster move, is because it's such a clean balance sheet compared to maybe some of the other ones in the space, maybe like an Intel, and maybe not AMD, but some of the other ones in the space. So this is a very, very healthy chip maker, and they're certainly on the forefront of a lot of the technologies that are being adopted. Now, from a cash flow perspective, everything looks really good. We went from 1.6 in the previous period all the way up to 2.5. That's for 6 months ended. We see here, this is where we purchased the marketable security. So I showed you on the balance sheet where their quote unquote cash went down, most of it got dumped into these marketable securities, as we see here. And then here we see the acquisition of the business. So you see this is where they acquired a company. They obviously didn't do that in the previous period, but they did it here for $7.1 billion. We see here they issued debt here. So we issued $5 billion in debt. I would guess most of it went to kind of cover this acquisition or kind of finance that into a certain extent. So we did have some cash flow. You see cash and cash equivalents at the beginning of the period. We see that it went up considerably. Most of it had to do with the fundraising we did with the debt cost. Now, from a chart perspective, this stock has been on a runaway train. Yeah, if you want to try to catch this stock, I would maybe try to wait till it pulls. It almost looks like it wants to maybe roll over a little bit here. I would wait until it pulls back. I put in a trend line here. I'm not saying this is the most accurate trend line, or if you need to use this one, you could probably even bump it up if you want to like bump it up into here, get it really tight up there. You can see that when this stock pulls back to this trend line, it tends to want to keep going. And so at the current price where we're at, if we pull back to 460, which is, I guess, about, it's about $20 off where we're at in the current share price. If the stock were to trade back there, I would consider that an interesting entry point if you want to get in there, because this stock has just, the top is blown off of it. Okay. There's no, and you see here on the MACD, this thing has been trading high and just has stayed elevated. Okay. Partly because of the industry that they're in. Cloud computing is so hot. Gaming is so hot. Just being on the cutting end of the chips that Nvidia is a part of, the graphics chips, all the cloud computing chips. It's just a hot sector. And so to think you're going to see one of these big dips like you did 2 years ago, I don't necessarily think that's in the cards anytime soon. But if it does pull back to this trend line, that's what I would wait for. At the current price, it's 460. Now, obviously, if a few weeks go by, the stock's going to keep trading up. This trend line's going to go up. And so maybe see, we have a little gap here. I could see maybe 468 if you want to get a little aggressive with it, 470 if you own some AMD, maybe you own some Intel, maybe you own some of the other chip makers, maybe you jump in here in this. The other option is find the chip ETF, find one that has exposure. I think you want exposure to Nvidia and AMD. Those are the two that I think are really firing on all cylinders. I would try to find the ETF that has the biggest exposure to both of those if you don't want to directly buy into, say, AMD or Nvidia. So that's Nvidia for you. For me, the quarter looked great. The balance sheet is fantastic. The valuation has gotten a little stretched like most stocks. If you can look past that, you can close your eyes and buy this one if you want. Personally, I am waiting for a little bit healthier pullback. So that's Nvidia for you. Hopefully you guys enjoyed this one. We'll be back again soon with another video. Hit that subscribe button if you like what we're doing here. We'll be back again soon. Good luck with your investments.